Hello, today is Monday. It is the 9th day of June 2014. My name is Derek and I'd like to welcome you to today's chart analysis video, which will be that of the technology indice of the Nasdaq 100. Three different time frames, very long term. The one on the screen now, a 22-week chart going back 40 years, over 40 years. And then the next chart will be an 8-week chart, with each period being 8 weeks, or going back to here, 15-year chart. And then a very short-term chart, a daily chart, going back 100 days, pretty much from the start of the year. So let's start with analysis, go through different key indicators that I like to look at, which is mainly the Fibonacci retracement, how the price action moves within this 18 average band. And let's get started. So really, what's the message state when we look at this? It's fairly obvious, straight up. There's small amounts of corrections, but really not much. And then on the breakout here, the only real correction is this one small red candle within the way up. Upward trend keeps going. And when you see charts that look like they're up too much, you could be looking at a chart in here and say, you know what, it's up too much. It's got to pull off. It's got to sell off 1,000. And next thing you know, it goes up to 5,000. And yet you could have been saying the same thing back in here. As silver in 2011 making its way up to 50, people on the break of even 35, even 25 were stating, price action's so high, it's got to pull back and sell off. Well, it did at 50. And the lows was 8.5 for that chart, which meant it gained about 6 times before it pulled back. The lows here are about 55. Multiply that by 6, that's over 300. So you're talking somewhere around here as the same gain, of course, that it would have had. But we're looking at a chart priced in fiat currency, an inflationary instrument, because the inflation, the creation of such is large. The real true currency inflation is somewhere in the ballpark of around a dozen%, 12, 10, 15%, which quite frankly is out of control. Price inflation is approximately at 8, 9, 10. And official inflation, I think, is around 2. Anyway, so upward trend, so obvious. Since then, it has went sideways. And within this 18 average band, the only time it ever went below it, here. Decent sized move here, but didn't do anything more after. Same thing again in 2008. And within this, the band traded sideways. So markets correct either through time or through price. This is a situation where it corrected through time, even though the move from 5,000 to 1,000 was like 5 times big move within the chart, because it went up 100 times from here to here. It's just a sideways correction. The bands were going sideways. That indicated sideways movement. Now the bands are starting to go higher. We're on period number 5 in a row above the 18 average of highs. The 18 average of highs is set up right now, or is priced in at 3184, which means it's about 1,100 above it. That's a large amount. And you can stick and look at this here. This is 5 periods here above the 18 average at around 600. And it goes to 5,000. So it's not like it's going to definitely go up, but the market is regaining an uptrend. It very easily can have significantly large, violent swings towards the upside. Now, for now, the test I'm looking for is that 5133, which will be more clear within the 8-week chart. So let's put that on right now. This is the highs from the Nasdaq bubble at the start of the millennium. Going from, again, 5133 to 1,100, that's pretty much a 5 times of its move. After the bottom, this is an area where, okay, you come up to the band, and now you break resistance. So now you want to establish resistance, which occurred, come back to the band, bang, bang, and then break resistance. Well, it kind of broke it here. Did have another support test, and then it moved very close to the 61.8% Fibonacci level. For a move to be a failure, which is for this to be a failure, it needs to hold, stay below this level, or not stay much above it. So therefore, when this thing was going lower, crashing in here, the bull market had not resumed as of yet, And in 2008, when it broke down below the 2000 level, it had regained its bear market, Failed moves, fast moves. So there's that breakdown below, which is that of a failed move. And then the fast move in the opposite direction that occurs shortly afterwards. Within the band, as far as it is placed, you have the band flattening it within it, and you have resistance that is established in here. So therefore, you come back to the band, you break resistance, there you go. You have another test of 61.8, back again to the band, high or low. Next test of 61.8 is supported for several periods. And then on the resistance break, it has been non-stop to the upside. A test of the previous high is highly expected to occur within this now because of these patterns. I'm not going to say it's guaranteed, but the probability chances for it to occur are pretty high. What it does after that, well, the test could keep going higher and maybe it'll be a top, but usually that when this pattern plays out, it usually makes it to that next level. Finally, let's take a look at this on a shorter term mark. This is the daily chart going back to early January, mid-January. And within this one, we got this high, we got this low. And since we've had this happen, we don't find resistance here. After 3 or 4 significant days going from 4100 to 4230. There's your sideways movement. When you break this resistance here, what you're seeing is, well, hey, this held and stayed above the significant Fibonacci line for several periods. Now it looks like we're going to test this previous high, which is 4372. Now the other long-term charts were stating that it's probably going to keep going higher than that, but within this time frame you would expect that, again, decent chance it's going to keep going up probably within the next week or two, if not a couple of days. Ideally selling off and coming back, maybe not towards the band, but then breaking resistance and then continuing that uptrend that we see on the more longer term charts as it attempts to make it up to that 5,000 significant mark from before. So thank you for tuning in to today's video, and have yourself a great week. Bye-bye.